Today is Saturday, but I'll be reviewing Friday's price action. Taking a look at what I did. I said I wanted this low today, mechanical bias, but I wasn't too sure because we're in all-time high conditions. Um, I was not expecting this. That old tariff boy out here just came in and goes, "Oh, 100% tariff on China," something. It's fucking comedy, is what it is. Just get this massive drop. Um, so today I broke my rules. Um, I broke my rules because I saw this volatility and I wanted to come in, and it was happening after I was supposed to finish trading. So my cutoff is the 11:10 macro. Didn't really get any trades in today. There was one that I could have taken earlier, which I will talk about, but I sort of broke my systems and then I blew a HEVAL and reset it. Then blew it and then reset it again because there was like some reset discount. Honestly, I really regret it because I broke my rule. I wouldn't follow my system and my process, but whatever. I ended up 900 on the eval. I'm not going to do that again. Um, I just need to have more self-discipline and control. Uh, so basically, it was just your classic gambling order filled, order filled, order filled bullshit, and that was sort of in this area right here. I was on a 15-second chart trading this lunch range. Honestly, lucky to end up 900 instead of blowing it for a third time, but whatever. So let's go ahead and we're going to go ahead and review what happened yesterday. I'm going to chuck this on. So you notice we had relative equal highs in London. We had these liquidity pools for previous days. So, and we swept London's low, put in a good solid low with a good strong reaction earlier in the day. So this was actually my favorite model when you have relative equal highs above, right? This is essentially sort of the bare bones of it. You get relatively equal highs above the market. Asia's London's high here. Then you get a retracement to a discount, BISI in this case, or a premium SIPI. And the important component here is time, because what you're essentially trying to do is anticipate which way 930 is going to run. And this is not a high necessarily like a super high win rate strategy, but when it works, it really fucking works, and it works quickly, and that's why it's my favorite strategy. I really have not, and I'm really planning to backtest it a little bit more, but it's also kind of rare. It only seems to happen in certain market conditions as well. Like you need to have the equal highs, you need to have engineered liquidity, you need to have like the discount BISI basically. So this is essentially what it was with a 2022 model of some sort. Now I've sort of seen it where you put in the low, you can put in the low at like a bit earlier, like 8:30ish, and then you start to get a rally up, right? And you can enter in a lot higher. The problem is the point is you kind of just want it to be like a discount BISI or something. If you can sort of see, you could have used this one with the stop down here, or you could have used this lower one here. When I was watching it, the sort of the main criterion is that you have to enter at 920. So, and then you're looking for the bit to deliver at 930. Now, sometimes, in a lot of cases, it'll just go down, stop you out, and then freaking go for it. In which case you can sort of sometimes get a confirmation entry on the 15-second, but I'm kind of going, that's outside of the scope of this video. This journal. The point is, I saw this, I had it on my chart. This is a system that I have, and I didn't execute on it, which is not good. Really, really not good. I need to be executing on my systems if I want to be successful in trading. So you know, it was disappointing to me for that reason. Um, that was really the only trade of the day, to be honest with you. Um, got this long, kind of this long, I suppose. This is a similar sort of a concept where you have the IFVG, and then you have a retest, but not using a macro. So you come up and it didn't sweep out these highs here. So you end up with this cluster liquidity here. You kind of want to see this get run through. Now because we'd swept all this buy side and come back down, you're really looking to play within the range. You're not looking for it to just keep fucking running. After it's purged all of this, you're just looking for scalps, not being greedy in these sorts of conditions. Really, the only way you could have caught this is if you've been bearish because of the buy side was run up. Okay, and then maybe you're in this civvy right here. Okay, or you could have used a confirmation setup using this one, buy side taken, right? And then you have this civvy right here with a market structure shift. This is a 2022 model with a breaker using internal liquidity. But realistically, you're all out of the market here, or like here on the low of the session. Maybe if you're a fucking genius, you know, you're coming down to here, but realistically, the only people that know that Tariff Boy was going to tweet about tariffs would have been Tariff Boy and his team. Now, there was some interesting activity in the cryptocurrency market. Like someone made 88, I saw someone made $88 million or something ridiculous. Hold on 1 second. Sorry, I just got a call. So yeah, this 2022 Civi here, confirmation entry. As for sort of systems, I mean, I don't really like these. I don't like sitting in these trades. I go fucking crazy just sitting here. Like, I would have gotten stock break even on this. I would have trailed break even here. So, realistically, this wouldn't have worked for me. This is really the only one. Now, as to why that is, maybe it's issues of the own issues as a trader, patience, whatever. I gotta work on it. At the moment, I'm just trying to focus on my own discipline and following a process. And sort of focus on patience from that light, as opposed to sort of, you know, trusting the system as much, just following a process. And I like to go break even early because that's a habit I got from Apex, and the trailing, the intraday trailing drawdown on Apex, always has whenever I trade with them, it's just a big toll on me. So mentally, it's like I'm always thinking about this fucking intraday trailing drawdown, and it's like in my head all the time, so I just kind of stopped trading with them. I know a lot of people, I know people have gotten payouts from them, so I mean, that's not what I'm saying. I'm just saying I don't like the intraday trailing drawdown. But yeah, we got the Civi, we got a market structure shift, we got the breaker, we got it off internal liquidity after we swept a solid liquidity pool. And you notice that it was not, it was the price was far too weak to even go and take previous day's high. So you do have a solid narrative to build tapping in a short position for this. I think it is realistic for someone to have caught it using ICT concepts. I just want to see their executions. Like if it's just a random fucking execution in here and they're like, and then they're acting like a genius, ignore them. But if they show the executions, it's in this one of these civvies here, right? And their take profit is down here, right, at an actual realistic target, then you know they caught it. But yeah, you get the idea. So then we came back down, we swept here, absolutely no chance of it going and we just consolidated. This wick, ICT has given us a new buzzword called premium sensitivity. This wick showed premium sensitivity. Now we got the IFVG here. I prefer to wait for limits because I got bad internet and I've gotten some absolutely terrible fills. But you know, like Dodgy would have said, "Oh, this is like a siege set already down 50 points or something," and you would have gone break even here. So I mean, if you're Dodgy and right, maybe you got this. I don't fucking know. But after that, it's kind of like taking trades after 11:10. The entering trades after 11:10 is against my rules, so whatever. Doesn't really matter. All that matters is this and this stuff here. Targeting this liquidity. And the fun, I will speak a little bit more on this model before I go. You kind of do want to be really quick. You don't want to be sitting around waiting. You want to have speed. Pretty much immediately upon 9:30. Ideally, you want to see it starting to run up, starting to sort of get some upwards price action after 9:25. You want to see it starting around 9:27, 9:28. If you don't see that, when I don't see this happening, like in this 9:29 candle, for example, I saw this, I felt confident, right? Even though it wicks back down, it's like I know that this is something that can happen. If I don't start seeing it running up, I start getting worried that beforehand, I start getting worried that it's going to stop me out, wick me out, and then go. So that's an opportunity to sort of maybe get out of the trade. I haven't really tested it that much. That aspect of it, I'm just speaking from experience and memory. So maybe I'm just delusional. Someone else back test has found this edge as well. I don't know. But yeah, that's really it. Really it for that. These two trades, or three potential trades, the only real ones that I sort of see I really would have taken, and I failed to execute on all of them and instead decided to gamble after I saw price moving. That's why I failed to execute. I was multitasking. I was working on my university stuff. You know, I was talking to people, talking to my girlfriend. Like, you know, I was not completely focused at all. So maybe that's something I should change. But the point is, I wasn't locked in. I didn't trust my system. For it. And then because of that, this is actually a frequent pattern now I'm thinking about it. When I fail to execute on my systems and they're profitable, I'm much more likely to come into the market because I feel like, oh, it owes me money. Market doesn't fuck, but it's just like I feel the urge to go do it and it becomes stronger because I missed my systems. I failed to follow my rules. So yeah, look, shit happens, but what can you do aside from just focus on big disciplines, building more habits? So now I'm sort of going to start looking into talking about my more overall picture. I subscribe to an 18.6 year land cycle. I want to make an actual video going over this tomorrow. I also want to make videos for my playbook about all my trading edges that I use. But and systems that I have, because I have a lot of them, and I think a lot of them are quite good, but I just have trouble executing them. It's more discipline and stuff, so I need more accountability. But going back to this, I look at the real estate market, I look at land, I look at labor, and I look at capital. These are like the three main components. Land is often grouped into capital, and I never quite understood why. Because I feel like land is something that you have to have. Like everyone has to have somewhere to live. You don't necessarily have to have capital, right? Hypothetically, it's possible for you to, you could do something from nothing. You get a job. You can get capital with labor, but it's just everyone always has to occupy land. It's just like laws of physics. It's just the rules. Like it's just it's just simply something that you can't argue with. So I don't understand why we don't look at land as part of the economic equation more. And then you also think, and then you also sort of account for the fact that it's the main source of yield. Like if you look at Earth as, or the planet as a sort of a thermodynamic system, energy in, energy out, right? Sort of betraying my studying engineering, sort of making it obvious here. And just think, how is the energy absorbed? It's absorbed by the ocean, it's absorbed by the plants and the trees and the land, right? The land is the main, it's like the thing, like place where things live. It's a space that you have to occupy on the planet to exist here. If you're a life form on the planet, you have to exist. So I mean, maybe I'm rambling a bit too much now. I think you get my idea. So the theory goes with the 18.6 year real estate cycle. This is sort of an average number, first of all. And I'm pulling all of this from a book by Phil Anderson called The Secret Life of Real Estate and Banking. So I didn't come up with it. Every 18.6 years or so, you get a land-led recession. That's it. And we're looking at 2026 for that to happen. Now we're kind of getting close. The last one that was this was the 2007, 6, 8 bullshit with CDOs and crap. Then before that it was just keep subtracting 18 years. So in the 1990s, roughly 18.6 years. And on average, this happens every 18.6 years. The shortest it's like 17, and the longest was like 21. And the only times it's gone all the way back to when land was first enclosed in the US. And for some reason, you get the same rhythm if you go and look at real estate data in the UK. You can trace this back like hundreds and hundreds of years, and it's still consistently happening within this sort of time range window of 17 to 21 years, average 18.6. As for why that specific number, I leave it up to you. But, my question sort of here is this an early top in that cycle? Now, why does the land cycle affect this? Glad you asked. First of all, like I discussed further, everything has to occupy space. Secondly, everyone's got a freaking house, right? The huge part of every single economy is the house. The housing market, the land market, is the largest one in the world, I believe, or one of. If not, I think it should be the largest one in the world. You can go and Google, fact check me, whatever. I know it's probably at the top, very close to it. I don't really track these numbers that much specifically. I just like watch the land market. So I should also credit Jason and Michael Pizzino just quickly because they're who I first heard about Phil Anderson and the cycle from. But anyway, going back to this sort of ramble. My question I'm sort of asking, is this sort of leading into the top, of this sort of cyclic framework? Is this possible? Now, I happen to look at this chart and I see this weekly BISI down here. I see an unmitigated BISI that jumps out to me. I see lots of liquidity on a weekly chart. Here. And then I sort of think about that whole traditional Wall Street cheat sheet market cycle thing. And I think, have we gotten euphoria? And you know what? I haven't felt euphoria in crypto. This is sort of my main high time frame market. I haven't felt the euphoria, which feels crazy to say. But like after this massive run up, that feels crazy to say. But I haven't felt the same euphoria that I felt in here and here. It hasn't felt like a party yet in crypto. And the main reason for that is this, Bitcoin dominance. Like, we take a look at this, it hasn't gone down. We haven't had massive amounts of capital flows into out of Bitcoin and into an altcoin market. We've had it out of Tether dominance and stablecoin dominance, but nothing out of that. So it's just like, I'm just sort of asking, I want to see a big sustained bed shit from this before I call a top on crypto. I just haven't had the party yet. There's been no party. Now, maybe the party's happened and I missed it. Maybe I wasn't invited. Who fucking knows? But I haven't seen it and I just not feeling like it. My framework does predict this month for the top of Bitcoin, but there's still been no party. And the question is, do we need the party? Right? Am I wrong that we should have a party? I don't know. Couldn't possibly say. But I haven't seen the party here. And I'm not sure. I mean, everyone says that we're in a bubble, that this AI thing's in a bubble, and then I go and use it, and I do all the things that I do. Like, I can whip up these custom tools in Python purely using the AI, and it's just like, I feel like not enough people are using it. Everyone's using it as a glorified search engine. The second people figure out how much you can do with this shit, I think that the AI bubble is going to become even more of a bubble. So I don't think this is the top. I really don't feel like it's the top. One market that I think could be close to a top time-wise is gold. The reason why this is simple is because I saw headlines in Australia, my own country, of people lining up to buy gold. They were all lining up down the street, and I see that. I see the masses flocking to gold, and I think, oh my god, they are going to get destroyed. Now, bull markets can just continue going upwards indefinitely. So, I mean, just timing-wise, I'm looking for something to happen soon. That doesn't mean I think this is the top, although this is definitely a short model. Can't argue with that on a 4-hour chart, right? We've got the SIBI. There's a 2020 with a market structure shift. You know, this is a textbook short model retesting the SIBI, right? And it would have, and then I have the confluence. You know, we got an IFVG, right? Then we have the confluence of everyone rushing in to buy it, and I just can't help but think maybe gold's top. Now, on maybe it could come down here. A large unmitigated BISI. Come down here and still be bullish. Maybe this is just a short-term top for gold. Maybe we see something just down to here. No idea. I don't want to short this shit because I don't want to get in front of this fucking freight train. Look at this shit. This is crazy. Just up, boom. Oh, bro. We're going back to NQ. If we are bearish, and this is a pretty bearish weekly candle, I could see us coming down into this blue box here. This also jumps out to me. This new day opening gap, it's been unmitigated, but we'll cross that bridge when we get to it. For now, I'm just going to play it level to level. We are in a weekly BISI, technically right now, so some sort of a bounce visible on the 4-hour time frame pairing is plausible. It could just be a little stall. Could be anything from this or this. You know, we don't know. We don't fucking know. We'll know when we get closer to the timing wise. Or just shit the bed. I mean, we've got these lows here. Like, what the hell? Point is, I think this is my direct liquidity for now. This big BISI and all of these lows, all of this liquidity down here. And I don't think we're at the top yet. Now, maybe someone closer to the market, closer to the Nasdaq. Like, I'm not too close. I just scalp it. I don't give a fuck. I'm not much closer to crypto. That's what I'm sort of basing this. We haven't had a party statement off. But someone close to the market would be able to tell you something better. But, you know, I want to see the party. Where's the party? You know? If there was a party, why the hell wasn't I invited? So yeah, that's sort of my ramblings. I do want to become more structured with these thoughts. So I reviewed them this, so I'll do my forecast tomorrow. I also got a to-do list. I want to make a playbook of my YouTube playlist, but that'll do it for today.